Hello, ladies and gentlemen. Welcome to the X-Force Global channel. We're going to be going over Bitcoin. We have a lot of different scenarios to talk about. Just a little disclaimer, none of this is financial advice, but again, it's great to be back. And moving forward, I aim to provide weekly updates and also possibly daily updates as well. So let's get into the scenarios without any further ado. So as we can see, we're currently observing a few equally plausible scenarios if you have been following me on social media. And one suggests that we've completed our local structure, possibly as a larger WXY double zigzag scenario that has finished its Y leg. It's the final leg that we've been looking for quite some time. Or we might be creating another one, creating another possibly choppy price action. So alternatively, we have another scenario where we might suggest that we might see one more leg down that breaks this previous low downward to conclude a possible wave C leg within a larger flat pattern that would replace this WXY as an AB and then C leg that we would be working in right now. So this first scenario, since it's just more simplistic and more equally better looking than all the other scenarios, even though the market suggests how we might go for one more possible move to the downside, we have to work with what we have. And the current data suggests that we do have evidence for a possible bottom. Now, what is that? Well, like I said, what we have here into wave W is a three-wave move. We have a three-wave move into here, a three-wave move into here, a three-wave move into here, and this, ladies and gentlemen, creates the WX wave. Now, for here, this is where the things get tricky because this is where a lot of us are going to be making arguments against each other via bulls and bears. Now, this move here, I can see this as a completed possible ABC leg, and that helps us remove the inefficiencies that we might be seeing in a lot of the ABC scenarios with possible overlaps happening. But again, markets are also suggesting that we might see one more possible low, which I'll be going over in just a moment. So for this scenario, the only evidence that I find that is the strongest for a possible bottom being made in is this level here. We have this 1-to-1 ratio with the wave W and the wave Y. Internally, everything is going to be remaining the same for every scenario, but this move here and this move here is equal in length, and it hit that bottom structure perfectly. So is that a coincidence? I'm not exactly sure, but I'm sure a lot of people are looking for equality within this market. So if we're using the Fib extension target, that's our expectation that normal Fibonacci levels can't give us. So that Fibonacci extension tool helps us give that projection, and that is that projection that has hit in the past week or so. And that is why I believe that is one of the strongest evidence that we might have also bottomed for this scenario particularly. Now, the other evidence that we have here is that there's a divergence being made here on the momentum indicator, both on the RSI and on the MACD. The RSI, as you can see, is when you create a lower high where you're also creating a lower low on the price action via closed candle bodies. Now, what does that suggest? Well, that's called a momentum bottom bullish divergence. And what that happens is it usually creates strong demand, even though the selling pressure is strong and the oscillation doesn't move down as strong as it might suggest. So that gives us a little bit more signal that a possible bottom is in. Now, again, our other scenario that I'm going to be going over is that it's also suggesting that we might see another low. Okay, so this is the first variation that I think has two strong pieces of evidence. Like I said, equal in length of the W to the Y ratio of 1:1, and we also have a clean possible ABC hybrid scenario. Like I said, ladies and gentlemen, these are motive and corrective waves, right? And you're going to have hybrid scenarios. Always you're going to have alternatives of a possible A or a 1 for an actionary wave, a wave B or a 2 for some kind of corrective move, and then a C wave or a 3 wave as the beginning structure of any impulsive structure or the beginning of some kind of completion of an ABC. So like I said, those are the two main pieces of evidence. But again, since the markets are suggesting for possible downside, what is the other alternative? Now let's talk about that. We have the possible ABC scenario that gives us a little bit more room to validate a possible C wave that is also relatively larger in bullish momentum structure, but we're just going to be seeing a different local structure to the downside. Now, how does that work? Well, these moves here, like I said, is locally the same. We still have that three-wave move down, and then we have a three-way move up. Now, the difference between that WXY is that it's now being replaced as an AB. Again, both corrective structures internally all same. It's just that the difference here is that there is a flat minimum requirement that has been hit at the 90%. So we can technically say that this is, according to the rules of Elliott wave theory and the principle of it, is that we have a 90% minimum requirement that is hit for this B level wave. So it's easily just as replaceable for that AB. Now, if we're going to be saying that this was the end of C wave, locally, we're not seeing a good looking structure because now instead of that AB, we have to find where this has to end. This has to be a wave 3 now because that was originally an ABC, right? So this has proven us or given us evidence that there might be one more leg to the downside via this possible channeling over here. And if this is now a 1-2, this has become a 3 and a 4, and this was the end of a structure. And now we're looking for another local micro time frame move to the downside that is going to be giving us a possible 3, 4, 5. And to me, personally, I think that is the overall expectation, just due to the overall spooked out kind of markets right now. We are seeing a lot of spooky markets within not only the commodities, but also in the stock markets. We have a lot of geopolitical issues at bay right now. So it just naturally makes us all, collectively a little bit more towards tendency to not buy Bitcoin at these levels, although they technically might look like a very good bottomed out move. So this is definitely within the structure that we might be looking for a possible move down. I like this idea as well because, like I said, we have a three-way move into a W. We have a possible triangle for wave X, and then another three-way move into a Y that completes our wave 4. And when we have that completion of wave 4, we're looking for the last actionary wave into wave 5 of a C of a flat. So again, we have a possible 1, 2, and now we're working for wave 3, which should be violent. And then we have another small corrective structure. And then we have another last final leg, possibly going into these regions here. Now, the difference between that 1-to-1 ratio is that we're also going to be looking for, when you're looking for a flat structure, is a 1 to 1.618 of a ratio between the A and the C wave. So if that 1.618 rather hits, it doesn't have to hit, but it's just an expectation target or a common target for a wave A to the C for an expanded flat structure. And that'll bottom out as a wave 4. It can end anywhere between the 1-to-1 in between the 1.618 before we fly out. So there's really no way we can talk about the bottom. All we're doing is managing expectations of the larger time frames and the local time frames on how we can combine a lot of these different factors, okay? So going back to the pros and cons, what is the pro to this scenario? Well, again, the pros to this is that we have a little bit more leeway room to work with in this local structure here. Instead of saying that this move was the bottom, that WXY scenario now has a possible validation level or invalidation rather. And if that breaks, then we automatically assume that this scenario is coming into play. But if we're a little bit ahead of ourselves and give us a little bit more time that we're expecting a little bit lower levels, we can expect that this scenario is going to be playing out first. So it's kind of that risk mitigation that you have to be making as a trader, whether you think the bottom is in or not. If you think that the bottom is not in, maybe 50% more or less is going to be what is going to be determining whether the bottom is in for you or not. So to me personally, I do think that there is a little bit of a higher chance, even if it's 51% chance, we still have to go with this scenario because that's 1% extra over the previous scenario. So that is what we have to do. We have to remain unbiased as possible. So this scenario has a little bit more weight with the current data that we have, but it's not necessarily entirely out of the invalidation with the first scenario where the bottom is in, because that also has its pros and cons. Like I said, it has that 1-to-1 ratio as a double zigzag scenario. But again, market inefficiencies do occur. They don't play out perfectly no matter what. Even if it's a 1-to-1 perfectly hit and it bounced up, markets are still being pressured right now. So if it's being pressured, we're also expecting one more local move to the downside, anywhere in between the 1 to the 1.618 before we get out of here. And that is going to be our first level of high interest, actually, around the 53 to the 54K levels before we rocket out into a possible fifth wave. Okay. Original expectation was that we were going to go for a possible move to the upside as a flat and then come down, but expectation-wise, we had that kind of removed, and now we're already seeing that move to the downside. So kind of ripping that Band-Aid off, which is completely fine, and now that is what we're expecting for a possibility. Now, like I said, that was the pros. Now, what is the cons to this scenario? The con is that I don't like the idea of having a C or a B wave of a flat hitting only the 90%. Now, that doesn't deem it invalid, and there is that small coincidence that it did hit the 90%. I just wish that we did create a better looking structure. Maybe even locally we hit that higher level, I would have been more confident. And maybe if we were creating a 1-2 during this time over here, I would have possibly gotten in a short. But this definitely was a good fake out, and fake outs do occur. It was really impossible to tell. I think even bears were a little bit surprised that we didn't retest the top one more time, but it has happened many times. And I do believe that this doesn't really have a proper look to it in terms of a flat structure, but it is what it is. It did hit all the minimum technical requirements, and the rules and guidelines all do fit in. All we're doing, again, like I said, it's all the same idea that we're working with in a local structure. Are we going for one more low, or are we already bottomed? That is the only two differentiations that you have to make. Now, there are other variations that we can continue to talk about, really. Again, going back to the ABC, we have a possible way of finishing off this C wave if we continue to do corrective moves as a possible diagonal scenario. Way too early to call, which is why I don't want to prioritize this in any way. But it's possible because C waves of a flat usually do indicate that it's possible to. There has been a lot of instances where we did create diagonals before we moved out. So that is one idea of a possibility. This is also being supported by the idea of the first bullish divergence that we've created between here and here on the 4 hours. So if we do get continued support, maybe we'll do another bounce here, bounce here, bounce here, bounce here, and then eventually create that apex, and then we move out of here, and that can be the completion of a C wave as well. And I think that's a very, very plausible scenario, but it's just a little too early to talk about. Going back to that WXY scenario, the second variation is that if this is an ABC, again, an ABC could be the beginning structure of a possible W wave. We have a possible ABC going into wave X. And if this level doesn't break, and at the current time of you're watching this, maybe these levels have already broken, but if it didn't, this can also be a possible 5-wave move into a new wave A, B, C that completes the wave Y, and that just creates a higher B wave before we go back down. Now, what I like about this scenario too is that the channeling for wave WXY of this larger scenario is relatively nice looking if you take it into consideration for overall expectation of a bullish, like kind of a bullish flag being created for you people who are more similar to simple terms. This could also just be creating a larger bullish flag, and a bull flag, if that's going to be made, more choppiness is going to be made. This is a possibility where we might just create another ABC to the downside to complete another idealized zigzag for wave Y. That is the second variation, but again, another too early to call scenario for that. So if we're going to summarize it, like I said, we have either the completion of this WXY as a 1-to-1 ratio for the wave W to the Y, or we're going to be seeing one more low locally, which still has the current stronger weight, even though, like I said, the con to this is that we hit a 90% rather than 100%, or even possibly the 1236 to the 1382 Fibonacci level for an expanded B pocket zone. We went a little bit early in our price action, and that is what we're going to be expecting for one more move to the downside, which is around 53 to the 57K region. So right now, I don't think anyone knows what's going to be happening. If the bottom is saved, this is what we are going to be expecting. And if not, then we're going to be expecting one more low to the downside, either as an ABC, and then more locally, we can be creating a diagonal of that C wave, or if we're in that WXY scenario, create one more high, then come back down, because there is liquidity within these zones as well. If we pull up the liquidity heat map, you can see that a lot of longs are also, or a lot of shorts are ready to be liquidated around the 70 to the 71K levels as well. That can help create the larger B wave of this possible Y wave as well. So hopefully that was helpful, ladies and gentlemen. I'm gonna end this video here, and I'm gonna try and put some timestamps onto this, and hopefully that was helpful. I'll see you guys in the next video. Thank you very much.